Morning, everyone.
Morning, Sharon.
How are you?
Yeah, not too bad. Yourself?
Yes, I'm good. Thanks, John. Hi, Claire.
Morning, Claire. You've got the mute on.
So I have, Gordon, sorry. Sorry, morning.
That's usually my trick.
Lip reading skills, that was all.
Okay, so we've got something like 15, 16 participants this morning. Is that right?
Yeah, that's right.
Okay.
We are in, Sharon, we've got the record on now. I don't know whether we want to start again in a bit or...
Okay. First of all, if everyone could mute their microphones and while the presentation is on, please. And it's just for me to say good morning, ladies and gentlemen. For those of you who don't know me, I know we have some non-members on the webinar today. So my name is Sharon McDonald. I'm CEO of Northwest Aerospace Alliance. And I'd like to welcome you to your webinar with NWAA and PM+M. As usual, the quick update is to say that NWAA staff are still working from home and for the foreseeable future will continue to do so. As always, you can contact any of us by email and telephone or video call should you wish. Programs SC21, CNG and NATEP are continuing as normal. These are using virtual communications, so please contact Catherine Toon for SC21 CNG and Glenn Bullen for NATEP. As always, I'd like to mention that we've set up a COVID-19 member support group on the Northwest Aerospace Alliance LinkedIn page. Do request to join if this is of interest to you. And as always, please do follow us on LinkedIn and likewise invite us to follow you. We'll always like and share your comments and hope you'll do the same for us. So can we go down a few slides, John, please, to the webinar page? That's it. So just coming up in July, on the 1st of July, we've got Thornton and Lowe talking to us about creating a tender pipeline. And on the 8th of July, we have Ed Ryder back from Biscuit talking about marketing and how important strategy is to your business right now, which I think we all know. So for now, if you could keep your mics muted, I'll hand over to Jon Connor at PM+M to talk about R&D tax credits. Thanks, John.
Thanks, Sharon. Good morning, everybody. Today's webinar is basically around how we can look at improving your cash flow through R&D tax credits. R&D tax credits have been around since the year 2000, and at the minute with COVID-19 and the impact of that, it's important now more than ever to have a look and see if you've got a qualifying project that can ultimately provide you with some form of tax relief. Now, just a bit of background about me. So as you can see there, Jon Connor, manager at PM+M, joined the firm in December 2018. And since then, we've been helping many companies, internal clients and also external as well, to benefit from R&D tax relief. They may have already been benefiting from a previous advisor, but benefiting and ultimately maximising their R&D claims as well. And throughout the webinar, we'll have a look at some types of costs which usually go under the radar and how we can filter those into your claim. I've worked within R&D tax credits for the last 8 years or so and helped many businesses, varying sectors, software, engineering, manufacturing, aerospace, food and drink, architecture, construction, many industries which typically display the hallmarks of R&D, but also some industries that maybe less so would. You'd think there'd be an R&D claim. PM+M as a firm, over 100 years of experience. We celebrated our 100th year last year, and since then we've tried to grow and move forward and push boundaries in the Northwest. Principally a firm of accountants, tax advisors, and also business advisors, covering the services that you can see on the right of the slide. So audits, accounts, cloud accounting, kind of looking at making tax digital and how that's going to form a part in the next couple of years. Corporate finance, certainly that's important from a cash flow and forecasting at the present. Payroll, tax, wealth management, full service offering is what we're all about. One of our key ethos is doing the right thing, and that quality approach to actually putting a submission forward first time, breeding success and confidence across clients and contacts that we're a leading firm and reputable firm of business advisors. Before I go any further, I just want to mention, obviously you've come on this for a purpose today, to either gain an insight or an understanding of R&D, whether you can qualify or whether you're missing out on some qualifying costs. We've got actually at the minute a range of free consultations. So R&D is one of those, to see can we help and understand your business and your claim. Wealth management from a pensions aspect, obviously that's massively important at the minute. Funds under management seem to dip, and how that can bounce back in the coming months as the economy kickstarts. And then also a corporate finance session, cash flow, funding, planning. That's massively important and has been over the last 3 or 4 months in terms of the Sybil's loans and that type of thing. So understanding where your business is and where it's going is massively important. So if any of those are of interest, please feel free to get in contact with myself, and I can put you in touch with the relevant person. And also PM+M as a firm, we've been putting a lot of content out there with regards to coronavirus. So PM+M Coronavirus Hub on our website, www.pmm.co.uk. Have a visit there if there's anything that we can help with. Please again, do get in touch. In terms of what I'm going to have a look at today, and kind of the next half an hour or so is discuss is an introduction to R&D tax credits, COVID-19, how that's impacted R&D tax relief. And to be honest, it's kind of been a positive for many businesses. Hallmarks of a qualifying R&D project, and then how that drops through specifically for the aerospace industry, and some examples of the types of projects which might qualify. How your project, funding plays a massive part of that, and there's 4 or 5 different options that and arrangements that we can look at and see how that impacts on your claim. The qualifying costs in terms of what your claim will be made up of, and then just thinking about some of the timeline record keeping that you may have or may not have in place, and how you can implement that moving forward to make it a bit more of a straightforward task to pull your claim together. And then for any companies that maybe use an existing advisor, may not, how we can assist, how we can help you to fully get the maximised value out of your R&D claim. And any questions, I'll leave any questions till the end. I know there's a chat function if you want to drop any questions in there in the meantime, but we'll open the floor up at the end for any specific questions. So a little bit about R&D tax credits I've just mentioned. Introduced in the year 2000, currently in its 20th year, and at its most beneficial rate, to be honest. There's 2 schemes which companies can claim under: an SME scheme and a large company scheme. Now, the definitions around an SME company is a company with a turnover of less than 100 million euros, assets on the balance sheet of less than 86 million euros, and less than 500 employees. Now, that's an and/or equation that we need to look at to determine whether you're an SME or a large company. And I'll cover which kind of scheme your claim might fall under based on a number of funding arrangements as I move through the slides. But broadly, for an SME claim, profitable SME company, your relief is 24.7% of any expenditure identified. So, giving 24.7 pence in every pound back is a very generous relief. And actually that can be, a loss-making business can surrender some loss to HMRC for a cash repayment. And that can actually push that relief up to a 33.35 pence in every £1 spent. So for companies thinking of working along a development path, and actually we might not get to a successful solution, having that quarter to a third of relief in the background is a real valuable outlook on your project. The second scheme is the large company scheme. So if you breach those conditions or as mentioned, the funding arrangements and how that drops through. The benefit of a large company scheme is 13%, 13 pence in every pound of qualifying expenditure. There are some differences between the two schemes in some of the qualifying cost categories, which I'll cover a little bit later again. But it's really important to understand, if you're planning a project, which scheme you might fall into, because the relief there, roughly half for the large company scheme, it can massively impact in on your cash flow. So since the start of March, and obviously the COVID impact of many businesses kind of halting production, HMRC have been really active on their front. Usually SME claims are processed within the 28 days, but sometimes that pushes on to the 30 to the 50 working days, dependent on how many claims they've got in. But since the COVID-19 impact and HMRC recognising that many companies need that cash boost now, they've been processing certainly 95% plus of claims and 100% of claims for claims that PM+M have put forward within 28 working days. So that is a real timely cash injection for those businesses that may ordinarily have been struggling throughout the crisis. Many businesses, and certainly how we've been working, is to see if we can accelerate year-end accounts. An R&D claim can only be submitted once your year-end accounts and your tax computation has been prepared. Ordinarily, that tax computation is prepared and submitted 9 months after your year-end, but what we've been doing is trying to bring claims forward so that we can accelerate that relief. And for those companies that might be able to benefit from a cash repayment, that has proven really successful. One company received a relatively small business, 2 to 3 year old, but they received a repayment of just shy of £18,000, which to them at the time was a great win and has allowed them to continue with their plans and push forward their cash flow towards the end of this year. Since the start of lockdown, we've helped companies internally and externally that have approached and been able to identify £3 million worth of qualifying expenditure, which, to put that into context in terms of a corporation tax saving or a physical repayment from HMRC, it's around £600,000, which has come back to our clients, which again, they've been able to push forward into future plans, filter that into their cash flow. And COVID-19 is, from an R&D stance, like I say, the 28-day turnaround on repayments has been fairly positive. HMRC seem to be reviewing and processing claims much quicker. So, a timely impact on that. One thing to note that's not on that slide is that the coronavirus business interruption loan scheme, those loans are a state aid loan, which it forms part of the latter part of a slide in terms of funding. But if you've received a CBILS loan and you're intending to use that loan for R&D purposes or for an R&D project, it's worth noting that may preclude you from or exclude you from claiming under the SME scheme and push that project to the 13% relief under the large company scheme. So if you have had any CBILS loans, it's worthwhile looking at that and just understanding how that might impact your claim for the next financial year. So who can benefit from claiming R&D tax credit? So R&D tax relief is predominantly aimed at companies, limited companies that are paying UK corporation tax. Now, there are a couple of other nuances that if you are a partnership and you've got a corporate member, we can look at how that drops through in terms of an R&D claim and there's some relief available. But 99% of the time, it's for limited companies or companies that are carrying out R&D in a joint venture. You might be working with a company and you're both incurring your own costs. Then both companies can make a claim in respect of their qualifying expenditure. Some of the hallmarks of a qualifying R&D project and some of the headline statements that HMRC use when determining whether a project qualifies for relief or not. Projects that seek to achieve an advance in science or technology. That's ultimately the headline statement when it comes to R&D tax relief. And lots of companies can't really look beyond that to see how their project might fit in with that heading. But what I'm just going to talk through is some of the key headings that ordinarily will then filter through into an R&D claim. So it's projects which might extend overall knowledge within your industry. So you might develop in a project that you're trying to push the boundaries, you're trying to be new with your developments, innovative, and you're going to try and extend that overall knowledge that's available within the sector. That is typically a hallmark, that you're trying to do something to push the boundaries. It's not straightforward or routine, and would therefore lend itself to having some form of qualifying R&D activity. The second part of that would be a new development. So you're trying to develop a new product, a new process, a new system, or incorporate new materials into a product or a process. Now that is something that ordinarily what we see is it's companies that have tried to patent on an invention, and that usually again triggers the hallmarks of an R&D project. It's advancing technology, it's pushing boundaries. There's a number of project unknowns that have to be resolved, and how you go about that will ultimately give you a product that positions yourself and your company at the forefront of the industry. The technology and the patent side of things is something that we see, but not as often as this point about appreciable improvements. So obviously technology is out there, products, processes, systems are out there on the market. And you're saying, well, it might be a competitor that has a product available. And you're saying, well, we see a number of pitfalls in that product. So what we're trying to do is we're going to appreciably improve on that product. And that may be from a functionality, performance, cost point of view, but that technology is there. You're taking that technology and you're trying to improve on it. Provided that's not a routine or a trivial improvement, then you've got the makings of an R&D project within that heading. This kind of covers off the next point, a little bit of the appreciable improvement stance. But what you're trying to do is you're trying to duplicate the effect of an existing product, process, material, but you're trying to do it in a new or appreciably improved way. So you might be trying to get that same product, the physical appearance of it, the same performance of it, but your process might want to be completely changed on that. So you might go from undertaking a traditional step 1, 2, 3, 4, 5 throughout your development process, and you might be going step 1, jump into step 3 or 4, and then back to 2 and finish at your 5 and your testing phase. That process change might provide you with some significant cost savings in terms of production and employee input, but you're trying to gain efficiencies throughout that process. And the last one, and to be honest, the one that most companies don't really consider, is projects that were unsuccessful, projects that you've had to abort for a specific reason. It may be because it was too costly, so cost prohibitive. It may be that you couldn't find a solution that was sufficient. That is something that many companies miss out on, because what they've got is throughout their project log, if they're on a longer development path and they know they're fairly certain they're going to get an outcome, they may have put a project log or a nominal within their accounts, and employees will log time to that nominal. That is easily captured within cost systems. Projects which, there's some form of uncertainty until the point when you've got that certainty that you think you might have a solution, those project logs may not necessarily, or nominal codes may not be set up. So if you have had any projects within the last 2 years, so we can currently go back 2 financial years from your year end. For instance, a June year end, we can currently go back to the 1st of July 17 to the 30th of June 2018, and the same again for the corresponding 2019 year. Once we get to the 1st of July 2020, we can no longer make a claim in respect of the June 2018 year. So it's worthwhile thinking about any projects that you have undertaken in the last 2 years. Were they a success? Have those been captured within your claim? That'll be a yes or a no, or partially. You may have captured some projects, but maybe not all. But any projects certainly that were unsuccessful or merely aborted, those projects can provide a real valuable relief, and something that we find maximises on companies' R&D claims. So they're the typical headlines: products, processes, systems, new advancements and appreciable improvements. Now, just a couple of examples of R&D activities within the aerospace industry. So developing or creating new components or materials, trying to gain a real efficiency or a step change in your company to put you at the forefront of that industry. Developing new products, trialing systems and processes, again, to gain efficiencies, to put you ahead of competitors. Creating new vehicles, navigation systems, processes. Now that will come down to a lot of software development. And software is a real grey area of R&D tax credits, but it's the second most claimed area as a sector, software development, within the UK R&D tax legislation. So if you've got any software development that's been undertaken for those types of things, it's worthwhile considering, is that a real step change? Was there uncertainties developing it? Or is it a routine development and something that's off the shelf that we've merely just tweaked and changed, which would be more of a non-qualifying activity? Certainly health and safety, adapting to changes in legislation, industry requirements, that forms a massive part within the aerospace industry, and something that a lot of the time projects will come off the back of, and hence any developments relating to legislative changes is likely to have some form of qualifying R&D element. New or improved metal forming, welding, machining techniques, anything again that's a process change that will give you efficiencies throughout your processes, will give you that competitive advantage, will allow you to be more cost effective and potentially win more work. Anything along those lines might form part of a claim. New heat treatment profiles, procedures. We work with quite a few companies within the heat treatment industry, and they are very successful R&D claims because they're constantly trying to improve and innovate. Cost efficiencies are key. Thickness, coatings, tensile strength, all that is a major part of ensuring your development project is as successful as it possibly can. Manufacture, build aircraft components, the tolerances, the specifications within that sector is huge. So anything to do with tighter tolerances or gaining efficiencies and processes through that is likely again to form part of that R&D claim for your business. And then the last side of things is more so kind of production line of new machinery, fixtures, jigs, tooling. So if you may be bringing in off-the-shelf standard components or materials or machinery to do a specific job, but you actually may be developing a machinery so that you can gain efficiencies throughout that process. Reducing the man hours that it might take in terms of production or on-site installation. So if there's any machinery developments to allow you to gain an efficiency throughout your development of a composite material or a new component, then that's another side of things that companies may often forget about when claiming R&D tax relief as well. So something to consider. And that list by no means is exhaustive. It's just a representative sample of some of the more common areas of the aerospace industry which qualify for R&D tax relief. If there's any specific projects that you may have that you think, I'm uncertain whether it might qualify, then that's probably a conversation that we can pick up in the near future. So please keep those projects to hand. And like I say, throughout developing those solutions and the 8 headings that we've got on the screen, if any of those projects ended up unsuccessful, keep those records in place. The next slide. Why should your business claim? The aerospace industry and aviation is one of the most innovative industries out there. R&D tax relief in the year 2017-18 resulted in identified R&D expenditure of 31.3 billion. So that was the physical expenditure that was claimed. And in terms of a cash benefit or a corporation tax saving for those businesses, out of that 31.3 billion, 4.3 billion of relief was given out. So, where we're at the moment, if you've not claimed, you think you might have some development projects, it is worthwhile looking into it. Because HMRC have a pool of money which they are keen to give out for those, you've developed a project that's innovative, pushing boundaries. There's been a number of uncertainties, technical challenges and project unknowns. They actively want to reward companies who might be taking a risk and trying to push those boundaries. Within the Northwest, the average R&D claim for an SME in 17-18 was just shy of £39,000. And that's a corporation tax saving or a cash repayment from HMRC. So I think the question is, could your business benefit from £39,000? How would you use that money if you've undertaken those projects? And we submit claims that range from benefits of £3,000 to £5,000, anything up to claims which have a cash repayment of £200,000 to £300,000. And there's one 4 to 6 weeks ago that we actually received back for a client, which was £125,000, which that is massive repayment for them, and will ultimately help them come out of COVID in a positive manner. Comparing the R&D claims within the Northwest to that of the UK SME scheme, you know, SME claims across the UK, average benefit of just shy of 54,000. So there is a differential there, and that'll be based on the salaries and some of the cost categories that we'll discuss. But ultimately, Northwest R&D claims have been on the rise the last 3 or 4 years. And if you've got a project that you think you might have undertaken, whether you're unsure of whether it can qualify, it is worthwhile having a conversation or getting in touch with either your accountant or an advisor or someone like myself to understand, could we benefit as a business from that? Qualifying R&D costs coming on the back of that £31.3 billion of identified expenditure. So the main qualifying area which drops into your claim is your staff costs, which is based on gross salaries, employers' national insurance contributions, employers' pension contributions, and any bonuses paid that go through the payroll. One key kind of aspect to note there is that many companies look to claim based on a charge-out rate, i.e. we've charged out at £40 an hour for that employee. Well, that inflates obviously the claim, and therefore we have to strip that back to the physical kind of cost the employee has for you and your business. Directors, the staff claim works a little bit differently. So again, it's based off the gross salary, employers' NI pension and bonus. Dividend payments that are made potentially to a director are excluded from an R&D claim. So one of the ways in which we look to help businesses is to actually say, in terms of your director input, you know, if that director input in terms of development, innovative projects, planning, testing, maybe even getting involved on the manufacture. If you're involved quite heavily throughout the year, it may actually be more beneficial to have a gross salary, a higher salary base going through, and a lesser dividend. Yes, you'll pay more tax personally, but the corporation tax benefit that you get from that increased salary will massively outweigh the personal tax payment that you'd make. So something to consider, and something that we do with a lot of our clients to understand how active and full on are, you know, managing directors, operations directors within their R&D projects. The second cost category is for consumables and materials. So anything that has been used up during a prototype, design, build, trial, that is ultimately either tested to destruction, is scrapped, is kept on site for display purposes, those costs for materials and consumables can qualify as part of your claim. Now, any materials which form part of a product which is then sold onto an end customer, those are the non-qualifying costs which we have to exclude from a claim. Subcontractors, externally provided workers, there's two ways of looking at this. Subcontractors, unconnected subcontractor, we have to restrict down to a 65% cost base. Connected subcontractors, and the definition being, you know, plus 50% shareholding, direct link between the two businesses. Then for subcontractor costs, anything, you know, involved with any external expertise for a specific deliverable on a project, or it may be testing that you've outsourced, those costs can qualify from a subcontractor stance. And akin to that, externally provided workers, if you've got any agency staff to assist with developing projects, then those costs can form part of the claim as well. And I'll come on to there's two cost categories in terms of staff, so direct activities and indirect activities, which I'll come on to in a slide or two's time. And then the last one, and often where we find we get a lot more out of claims, is kind of a miscellaneous category of light, heat and power, looking at your staff percentage of R&D staff versus your total staff. So your R&D claim might be £100,000 worth of qualifying staff costs out of £1 million payroll. That's 10%. Looking and saying, well, what our light, heat and power bill is for the year, and attributing on a similar basis. Software licenses, if you've purchased any specific licenses, CAD, drawing systems, CAM packages, that type of thing, we can attribute a percentage of that license cost to a claim. And any mileage as well, any reimbursed mileage of employees for time spent at research and development, design meetings, testing, trials, anything off-site that plays a part in that project, we can make a claim for those costs as well. Noting though that if those expenses are paid on a company card, then that excludes them from being claimed as a mileage cost. One of the HMRC quirks, but that's one of the tips that actually, £5,000 worth of mileage or travel, subsistence cost. Obviously, there's a £1,200, £1,500 benefit for an SME there, so it's something to consider about how you use those processes in your business. So those are the qualifying costs that you can drop into your R&D claim. Now, if we look at how you fund that project, so there's a number of different, and this is where the interaction with the two schemes comes in. So if you are an SME business and you funded that project entirely out of cash at bank, then that project will fall under the SME scheme in its entirety, allowing you to claim a relief of 24.7% to the 33% as a loss-making business. The most straightforward, the most beneficial route for the R&D claim. Now, if you've received a subsidy or some form of funding to help you on that project, so you may have said you may be undertaking a development for a customer, the IP rights sit with yourself and you're going to fund the majority of the project, but the first part of that project might be subsidised, i.e. an upfront payment. If that project has a value of £100,000 and you've received a subsidy of £50,000 and then you're going to spend £50,000 on the latter part of the project, the first part of the £50,000 and that subsidy amount will fall into the large company claim, benefiting from the rough 13% relief. The latter part of that claim, which is funded by the company, falls under the SME claim. So a split in terms of the rate of relief, and that's ultimately bringing you down from a 25% relief as a profitable SME funded internally, bringing that relief down in terms of a claimable percentage. Now, if you've received a notified state aid grant, so something like an Innovate UK grant, then what that says is that all of that R&D tax relief is a state aid as well. So you can't have two state aids on one project. Or should I say R&D tax relief under the SME scheme is a state aid. So where you've received a notified state aid, you've received an Innovate UK grant of £100,000, and that project in its entirety is going to cost £150,000, then there's no split between an SME claim and a large company claim. All of that project in its entirety will form part of a large company claim at the 13%. So even though you may have put £50,000 in of company's money, that will also be claimable under the large company scheme, again, bringing that relief down. Whilst such a scheme, you may have needed that to kickstart the project, it's something to bear in mind of, could we have funded it out of cash? Because, we've got potentially another 12-13% relief that we might be able to get out of our R&D claim on the back end. The fourth category of, development in a joint venture arrangement. So if you've developed with a company, you're bearing your costs and vice versa, then you can both make a claim. If you are both SMEs, then great, you can claim the 25% relief. If one is an SME, you can claim. If one is a large company, they're claiming under the 13% relief. But provided you've got a contract that, bears your own costs, you can both make a claim in respect of that development project. And then the last one is one of the ones that companies don't really realise when looking at an R&D claim. Working as a subcontractor on behalf of a large company or organisation. So you may have been subcontracted by a company, let's say Airbus or BAE for argument's sake. You've been contracted to deliver a specific project, a specific deliverable. The IP rights might remain with yourselves, and therefore that development path that you've undertaken has probably amassed more time maybe than what you might be billing. Airbus, BAE, as a large organisation, cannot claim subcontractor costs. So ultimately, that cost that you're billing them, they can't include within their R&D claim. Now, Many companies, you'll see that as, oh, we've done this project for BAE or Airbus, therefore we can't claim. Well, actually, you will be able to claim under the large company scheme for those costs that you've incurred. So it won't be based on the invoiced amount, but it'll be based on your staff input, any consumables and materials that you've utilised, and any externally provided workers that you've engaged to work on this development project. So if there are any projects along that kind where you've been contracted by a large organisation to undertake a development project, then it's worth noting that, yes, we can't get the SME relief on it, but we can get the large company relief on it at 13%. Now, that might only be a £10,000 contract, but if you've got 2 or 3 of those projects, it soon mounts up, and you'd be looking at the best part of £5,000 out of those types of contracts, which is a worthwhile relief to look at. So something to consider as you move forward. If you're working with those types of businesses, have that at the back of your mind, that you should be logging the time that you've put into those projects, because you can ultimately be looking to make a claim for those. So we've discussed some of the hallmarks of an R&D project, some of the activities within the aerospace industry, and then looking at that full cost picture of what goes into your claim. Now, thinking of that project timeline, and this is where we often find we help companies to really maximise their R&D claim. So putting a project timeline in place, having that record keeping in place really proves beneficial. And the staff time that is put into a project, I mentioned before, is split as direct activities and indirect activities. So the direct activities are things like market research, product feasibility. That is kind of the start of any project. Now that time is non-qualifying. If we've got a clear project timeline, we can say, right, the first 2 months of that project are non-qualifying elements. Our R&D claim then comes into process once we've got a project unknown or an uncertainty or a stumbling block of how we're going to proceed with that project. So then you come on to the specification, the build, design, development, test, prototype, testing, and then ultimate scale up. Those are the activities which are ordinarily carried out by maybe senior members, sat around the table having those initial discussions of product specifications, and then carried out on the shop floor. So any people that are involved with operations, management, manufacture, engineer, build, all that time is going to form part of your direct activities from an R&D claim point. And then the latter part of that is your R&D ceases once we're into field testing, we're into production, or you've been unsuccessful in that development, and you might have had 4 or 5 failed iterations and you've aborted that project. So a clear timeline of those direct activities is something that if revenue wanted to look into the claim in further detail or inquire into the activities, shows a clear development timeline of shop floor, managers, development design meetings, how you've got to that quantification of claim, and ultimately keeping those records of the project as it's gone along in terms of some of the challenges you faced and how you overcame them. Now, the indirect activities is another area that many companies don't even consider. They've considered their engineers that are developing the solution. They've considered the quality assurance manager. They've considered the director's input and the operations director's input, but they've never considered the indirect activities that kind of go on a little bit behind the scenes to that project. So these categories, they may not be actively resolving the technological uncertainties, but they're playing a part in allowing those engineers, shop floor, members of staff to do their job. Now, from that point, there's no R&D within raising finance, what we've just mentioned about you might be trying to get a bank loan or Innovate UK funding or that type of thing. No R&D there. And similarly, the latter part of once your R&D has ceased and you might be looking to get a patent on that development, those costs and that time doesn't qualify. But in the middle part, you've got your R&D that's in progress. So you might be saying actually to your HR team, well, we could do with a new R&D manager or somebody to work on this project from an engineering stance, an electrical stance. That recruitment time from the HR's perspective can qualify in a claim. And we're only going to talk in small percentages, small amount of hours. But once you've got that time, along with any training that's directly attributable to R&D activities or what you're trying to achieve, purchasing, procurement of technical material supplies, that type of thing, and the administration of so report preparation for allowing feedback on the design and the development and the testing, test procedures. Once you've captured that time of 2% of somebody's role, which is roughly a week out of their year, that is something that ultimately then starts to rack up. And if you've got 5 or 10 people within your organization that are working kind of behind the scenes but are actively contributing to that project, and that's where we find that companies get a lot more out of their R&D claim. And certainly senior time sat around the table, that is often not captured because either they don't complete timesheet systems, or it's never really thought about because it's not physical hands-on developing and building that physical product. So direct, indirect activities, and then we come on to the record keeping, which we've kind of mentioned. But start date is important, understanding when that project kick-started and an overview of what that project's going to entail. When you first come up with that uncertainty, when you first resolve that uncertainty, are you going to have uncertainties thereafter? So notifying of the start of the project and also the end of the project. So once you feel like you've overcome all those uncertainties, that is the end point from an R&D tax relief claim, and that qualifying cost time has then ceased at that point. Or you may know where your expected completion might be. COVID has certainly played a massive part in expected completions being March. That's now pushed on. It's not June. It's going to be maybe October, November. So that project pushing out is key to understand how that drops into your claim and which financial year. Your project may span multiple years, and it's understanding what costs correspond to each respective period. A little bit in the middle is your R&D in progress of how can you keep records throughout that project to make it straightforward and easier task to put a claim forward once your year-end accounts and tax comps have been prepared. So ongoing record keeping, and that might be timesheets. If you complete timesheet systems, that's great. Putting a nominal or R&D codes within there, that certainly assists in getting an accurate submission together. If not, HMRC acknowledge that not many companies do complete timesheet systems, but keeping a record of who is involved in the project, when they were involved in the project is really important and will help you maximize your claim as you move forward. Minutes from board meetings or development meetings. You might meet once a month, once a week, once a quarter. Keeping some minutes of what you've discussed in that meeting and having a kind of R&D note in there of this month or this quarter, we've discussed these types of activities. This is what we did. This is what we still need to do. These are the challenges that we faced. And it doesn't have to be a comprehensive list or a page of A4. It's something that just jogs the memory that once year-end passes and that if HMRC again, they want to have a look into the claim and inquire further, we've shown that we've got technical documentation and information of where you're up to, what you're doing, how you're going to do it, and anticipated timelines. All easy wins with HMRC that if they inquire into the claim, we've got backup and additional proof of a project. So something to consider. If you've not got timesheet systems, don't worry. We can still put a claim forward based on estimates. Technical documentation and record keeping is going to be massive if you want to really ramp up and maximise the investment that you're putting into your R&D activities. Now, some of the common misconceptions of an R&D claim, and something that we get asked all the time is, well, R&D activities only apply to white coat activities, laboratory-based activities. Well, like I mentioned at the start, we work with companies that software, manufacturing, engineering, food and drink, construction, various industries can qualify for R&D tax relief. If you're seeking to achieve an advancement in industry knowledge and capabilities and pushing the boundaries, and that comprises some form of technical challenge, uncertainty, or project unknown, then you are likely to have some form of an R&D project. An over-reliance on subcontractors, so you might be relying heavily on a subcontractor, but actually you've got development time within there. So you might be liaising with them. You might have a team of 3 or 4 people that are working on in the background at your company. It's understanding, do you have any contracts in place with that subcontractor? And ultimately deciding who has the rights to an R&D claim. Is it yourselves as a business, or is it the subcontractor? Who's got the intellectual property rights and that type of thing? One of the biggest ones, and one of the ones that, you know, many companies don't want to put a claim forward, is fear of tax investigation. You can soon get a flavour of a company from their attitude towards an investigation from HMRC. Companies that are kind of open-handed and say, come on in to HMRC, if they want to have a look at their R&D claim in further detail, you know, we've nothing to hide. What we do is put a full upfront disclosure together, so it wards off that, and we've not had an inquiry within my time starting at PM+M in December 18. But they're fearful that HMRC are going to look at the claim and knock it out in its entirety. That is not the case. You know, if there is an inquiry into an R&D claim, it's because maybe they want to understand the project a little bit more. Maybe they want to understand, you know, why have you claimed 10% of your R&D? Why have you claimed 10% of your payroll as R&D costs? They ultimately want to understand your business. It's because the first time you claim and the second time, they don't understand you and your business. Uncertainty of whether your activities qualify, getting in touch with a company like ourselves to understand, you know, what activities are likely and unlikely to qualify. That's the starting point, and we undertake, as I said before, free assessment at the moment to understand you and your business and what areas might qualify. Lack of complete records, we've mentioned about. If you've not got timesheet systems, don't worry, we can put a claim forward, even if that's looking back 2 years. Yes, it's more of a challenge to remember maybe what has been done, but we can still put a claim forward and put a pretty accurate submission together for that. And then the poor financial performance. So loss-making companies can still make an R&D tax relief claim, and it can be more beneficial in some instances than a profitable claim. So something to consider, that if you've had a poor financial year and, you know, at present, companies have had 3 months where they may have not been doing much in terms of turnover, etc., that may represent a loss in their tax computation. So something to consider, that you might be able to get some cash back. Whether you can accelerate your accounts in order to do that is something to consider with your accountant, or get in touch with ourselves and we can see if we can assist in any matter. So how can we help? Obviously, we've covered quite a lot in a short space of time there, but ultimately we undertake an R&D review, an assessment of your business and any qualifying activities to understand which areas are likely and unlikely to qualify. We undertake the full claim quantification. So we work with you to identify the qualifying projects. We will then take information from yourselves and ask specific questions in order to write up that technical report around aims of the project, technical challenges faced and uncertainties, the competent professionals involved in the project, and the outcome of the project. Thereafter, the reporting, technical report, full cost analysis. So we analyse all the costs that go into the claim to make sure that we've maximised and got our full entitlement out of your claim. And then we file the claim on your behalf, or we can liaise with an accountant to file. The report is sent to yourselves as businesses to sign off to confirm, you know, the report accurately portrays technical development activities undertaken during the year. And then with your consent, we file that claim. And then the after claim support is something that we offer as a standard as part of our service. So liaising with HMRC from submission through to the point when you receive your repayment. And if HMRC have any queries with that regard, we cover that time as part of our standard fee as well, which is usually contingent. So there's no upfront fees. There's no additional fees if there is an inquiry. And we only take our contingent fee once the claim has been successful and once you've had that repayment or corporation tax saving has filtered through to the business. So, like I mentioned, we're offering at the moment free R&D consultations, wealth management, corporate finance. If any of those are of interest, or there's anything on our website from the Coronavirus Hub, please do have a look at that or get in touch with myself. Thank you for listening. And I suppose I'll open up the floor if there's any questions, or if you want to get in touch with me after this, then please feel free to do so.
John, we have one question from Jeremy Rudyard. He's asking, can you claim for international flights, hotels, etc.?
it's one of the areas that is a potential. It's not a clear-cut yes, and it's not a clear-cut no. If those flights have been purchased on by an employee, and then ultimately you've put them through the payroll and you've reimbursed them, that could be the day after, or it could be your month-end payroll. If you've reimbursed that employee for the travel costs of the flights and the subsistence, the hotels, etc., then yes, that can form part of a staffing cost claim. If it's been paid on a company credit card, then those costs unfortunately can't be included in the claim, which it's a bit of a controversial area. Basically, HMRC was seeing a bit of abuse from all these costs going in for travel costs and how that was governed in terms of, is it qualifying R&D travel, mileage, etc. So they've changed the relief. It was changed a couple of years back to restrict it just to any employee costs which have been incurred personally and then reimbursed to that employee at a later point.
Thanks, John. You may have covered this, but I didn't quite get a flavour of it. But what level of expenditure would be worthwhile to proceed with a claim?
So that's a good question, and that depends very much on the business and where you're at. Like I say, we put claims forward that result in £3,000 corporation tax saving or £3,000 R&D repayments, up to anything, £150,000, £200,000 plus. I think it's really key to understand what your business, what that opportunity cost is. We say that ideally we want an hour meeting to understand you and your business, and then throughout the process, maybe half a day to gather all that information and submit that claim to HMRC. Now it might be a few touch points throughout a couple of weeks or a couple of months, depending on how quickly or slowly you want to pull the claim together. But it's all about the opportunity cost. If £3,000, £5,000 is of worthwhile for half a day, maybe a day max of investment, then we're happy to work with those type of numbers. The process for us is fairly similar, whether it's a very small claim or very large claim. We undertake a similar exercise for both. It comes down to what your business might need or what projects you've undertaken, and each year is different. One year you might have £100,000-200,000 of expenditure, which might be a £50,000 claim. The other year you might have £20,000 expenditure, which might be a £5,000 benefit. So it's just understanding, is the opportunity cost of running through a project, is that beneficial to you and your business? And often the case is yes, because £3,000 is £3,000 at the end of the day. That's how many businesses look at it. But it very much depends on you and your business and that opportunity cost.
Okay, another question from Jeremy. Does the use of the furlough scheme affect the ability to submit an R&D tax claim? You stated that the C-bills does impact that.
Yeah, so it's not going to directly impact on the availability of you making a claim. One thing to consider is obviously for that 3-month period that we've kind of just coming through, R&D activities may have come to a halt a little bit. So thinking about cash flow for your next year's R&D claim, you might have 3 months which you've got no activity at all. Where you've undertaken or gained a CBILS loan, and as part of that application, you may have specified that it was for some form of R&D activities, or it was for a said project that you want to continue with. Now, if that's the case, that project would form part of a large company claim. So if you've received a CBILS loan and it's for specific development, then you're looking at claiming under the large company scheme. If you've received a CBILS loan and it's more of a generic, you might be using it for your admin staff, support staff, sales staff as part of that furlough kind of arrangement, and it's non-project specific, then you should be okay to continue on your path of claiming under the SME scheme for any developments that you are undertaking moving forward. But it'd be worthwhile separating that out within the CBILS application and making sure there's no crossover, because that's one of the areas that Revenue have said they will look into as claims come forward in the next few months for those businesses that have obviously benefited from that CBILS loan.
Okay, thank you. Any further questions?
John, thank you for all of this. Now, you mentioned about your contingent fee.
Yes.
And some of your hours. How do you actually charge to help with collating and submitting the claim?
Okay, so our standard way of working, like we say, is contingent. That standard fee that we work with is 15% of the benefit. So I'll just, this sometimes get confusing when we say 15% of the benefit. It's not the expenditure that we identify. For instance, if we identified £100,000 of expenditure, that in rough terms as a profitable SME relates to an R&D claim and a corporation tax saving of just shy of £25,000. So what you should receive is either a repayment or knocked off your corporation tax bill. It's 15% of that £25,000 number as 100,000. And like I say, that covers, there's no upfront fee for that. There's no additional fee if there's a HMRC inquiry. It's purely that 15% contingent based on the amount of money that you receive back or the corporation tax saving. And we only get that or take that 15% commission once you've had that benefit from HMRC. It's certainty that you're not going to be paying, anything before that point.
Great, thank you for that. Sounds good.
Thanks, John. Okay, any further questions? If not, John, do you just want to put your details up again? So if people want to take note of them.
Yeah, so
thank you.
You can also find me on LinkedIn as well. If there's anything that, like I say, the consultations that we're offering at the moment, free consultations on R&D, wealth management and pensions at the minute, that's a real interesting one and how that's going to bounce back. And corporate finance as well, because the cash flow side of things is something that can play a massive part in your R&D claim, whether that's from just understanding, can we fund this project internally and benefit as a full SME? Do we need funding from an external source? And Peter Kelly, our corporate finance director, is also on this call as well. So if there's anything along those lines, then please do get in touch and we can understand how we can help with cash flow forecasting, modelling, and how that's going to drop through in the next 6-12 months. So they're really valuable, 30, 45 minutes of your time that if there's something to come from them and we can help, then please do get in touch.
That's great. Thanks, John. I found that really informative. So thank you very much. Just to confirm, we have made a recording of this and the recording will be available from Claire or on our website once it's up there. Just give us a day or two to get all that sorted. And once again, thank you for your time. See you on the next webinar. Thanks, everyone.
Thank you very much, John.
Bye.
Thank you. Bye-bye.
Bye.
Thanks, John.